So maybe to start, let's kind of just start at the very end and go from left to right and walk us through your background, what you guys are working on, and like how are people using your protocol today? Like what kind of use cases are each of you focused on?
Okay, yeah, I'll kick things off first. So my name's Winston. I'm one of the co-founders of Sega, and what we do is we're building exotic options in DeFi. So I think actually in the Asian markets, these products are actually a lot more popular than they are in America. So if anyone's ever bought a fixed coupon note or a digital auto-callable, you might be very familiar with those products in TradFi, and we're building those familiar products, but actually now accessible in DeFi and with crypto underlyings. So my background is mostly in tech and startups. Before building Sega, my previous company was funded by Y Combinator, so we went through YC's Winter 20 batch, and then before that I was working in San Francisco for many years. So it's been really interesting to see the growth and innovation, not just in B2B SaaS in Silicon Valley, but also in cryptocurrencies.
Hey guys, name is Alvin, co-founder of Maverick Protocol. So Maverick is a infrastructure for DeFi that facilitates liquid markets for traders, liquidity providers, treasury DAOs, or builders. So prior to Maverick, I was leading DeFi in MetaMask. And before MetaMask, I was building in Arbor, Tron, and BitTorrent.
Hey guys, my name is Edgar. I'm the founder of a company called Margin Group. We build a product called MarginFi. You can think of it as a DeFi native prime brokerage. We were really excited about all of the new DeFi products that were coming out. Seeing this new dimension of the financial system explode, identified an opportunity to help unify the trading experience in DeFi. Right? There's so many different sides to it, so many different products. Without some kind of unifying infrastructure, it could get hard to manage a portfolio as your exposure evolves. So we create one access interface for traders to compose portfolios. We help drive capital efficiency, risk management, and improve the trader experience overall.
Hey guys, I'm Sharon, founder at Brine. So Brine is a decentralized order book spot exchange, and we are a cross-chain exchange. So let's say you want to trade 10,000 times or 20,000 times in a second, but you cannot use Uniswap or SushiSwap or some other spot exchange that's out there, which is permissionless and completely decentralized. So you would probably end up using us. We provide you APIs, which would essentially enable you to give those API keys to someone else to trade on behalf of you, or in case if you're a hedge fund who wants to keep your funds completely safe. So let's consider this. When the Nomad hack actually happened, in case if you got to know about it very early, you could have actually exited your positions. So this is something we all provide, making sure that your funds are always safe and you're able to trade at the maximum depth and the minimized spread, and you're also able to trade as many number of times you want in a second. So that's essentially what Brine. We are completely enterprise, now also trying to move inside the retail angle. So yeah.
Awesome. So one of the one of the kind of things that people are very familiar with is like traditional kind of options exchanges, margin borrowing. Whether you have like a background on Wall Street or more kind of like Wall Street bets, via Robinhood, most people have used one of these products in some way throughout their lives. But I guess this question's for Winston and Edgar. Like, how do you guys think about like the benefit that decentralization brings to what you're doing, and how does it differ from traditional centralized prime broker model?
All right, yeah. So there's tons of benefits of having these structured products in DeFi as opposed to TradFi. So, and I mean, my co-founders and my teammates have years of experience trading exotic options product in traditional finance. So, they really know it best and are able to speak to it. But in short, for users of DeFi, the first benefit is access. So through decentralized finance, our users around the world are able to access some of these products that they otherwise wouldn't either be aware of or actually would be gated from because of things like financial wealth and access to certain types of bank opportunities. So that benefit of DeFi is tremendous, and especially for products like ours, where you can generate yield between 12% APY up to 50-60% APY. This is a really great investment product that now we're able to make accessible to users across the world. The second benefit of having our exotic options in DeFi is that the yields are actually higher than in TradFi. So because the underlying assets for these options are crypto assets like Bitcoin and Ethereum, retail investors can actually find 2 to 3 times higher yield than not just vanilla strategies, but also strategies that they might be finding in traditional finance. And then the last benefit for users of DeFi protocols such as ours, and also all of the great DeFi protocols up here, is that there's more transparency for users. So everything is on-chain, and most of this code will eventually be open source. So from a trust and security perspective, you're able to build and establish a better relationship with users who don't need to just believe that the black box is working, but can actually see and validate some of these things for themselves. So I think a combination of democratizing access to financial products, actually creating more benefits in the form of higher APYs, as well as greater transparency, are just a couple of the few benefits for users.
Yeah, I love this question. I get it asked a little bit differently sometimes. People go, how's it different, right? How's building in DeFi different than building in TradFi? And I say, look, in a lot of ways, it's not different at all, right? Because the high-level goals are exactly the same, and that's the point, right? Financial markets are about providing exposure, right? They're about creating wealth, building opportunities. Blockchain makes it simpler. It's easier infrastructure to build on, right? It is nascent, so that brings challenges, but from an architecture perspective, it simplifies a lot of things. And as you bring simplicity, you bring down cost, and you expand opportunity, right? I think that DeFi products will continue to see attractive yields relative to TradFi products, in part because they're cheaper to make, they're cheaper to maintain, right? And that transparency component, I think, is massively important for risk management. It's important for governance, for regulation, right? It's really what's going to bring the entire financial system forward.
Got it. Yeah, I agree with both those answers. Someone like might kind of like say back like, okay, so it sounds like there's a lot of like open access. It's pretty transparent. It's fairly democratic. How can that go wrong? Like, is there any risk that the system might get like over-levered and cause like a new financial crisis? Like, how would you respond to someone like, say, Elizabeth Warren, who would probably have those concerns?
Yeah. Yeah. So I think. I mean, there's always the possibility that something could go wrong, but I think that risk is actually lower in DeFi because of some of the things that we just mentioned, because of the transparency and the ability to actually validate and analyze things on chain. What that means is, from a risk management perspective, you're actually able to see how some of these things that could go off the rails, you'll see that far in advance, before any sort of crises actually happen. And so obviously, with the Terra Luna crisis that all of us observed just a few months ago, I mean, the core root causes there weren't from DeFi. It was actually from largely CeFi players that were going under because they were taking risky bets and making risky decisions without a lot of transparency. So I think while there's certainly risk to DeFi, the greater transparency and on-chain aspect actually helps to offset some of that.
Yeah, this is a really interesting part of the crypto journey that we're on right now, right? A lot of the issues that we've seen, that seem like they happen in this industry over the last few months, have actually come from infrastructure that is not DeFi. That is, it's older, right? It takes the older approaches, and I think the difference really comes down to that transparency element, right? Risk management is about policy and it's about controls, right? You get to decide how much risk you want to take. You get to decide what rules to follow when things go wrong, and then it's a question of, can you actually execute on that, right? DeFi brings significantly more transparency into rules creation, rules management, and it brings a lot of flexibility into that operational control. And so I think, while it's definitely early and we have a lot to figure out, I think it's mostly actually a human coordination issue. And as the organizations in the space mature and adoption grows, I think we'll find that this is an infrastructure for a safer system.
Yeah, actually, adding on to that too. With that being said, there's also a lot of DeFi protocols and teams that are building DeFi that care a lot about risk and growing their protocols responsibly. I'm sure everyone sitting up here, making sure that their protocol is secure and safe for their users as they grow. That's a top concern. So, and there's lots of actually protocols that are now servicing DeFi protocols in order to help them manage that risk as they grow. So, for example, Credora is one of the services that we actually pay for, and they help to KYC market makers. They help to analyze those market makers' balance sheets to make sure that for the options trades that we're engaging with market makers, that we're trading within reasonable trading limits. So I think there's a lot that is being done already to make sure that as DeFi grows, it's growing in a responsible way and mitigates some of those potential risks that Elizabeth Warren might have.
Awesome. So actually, surprisingly, in the survey results, roughly 70% of the audience had, used a decentralized exchange, which is pretty cool. Certainly would not have been the result 2 years ago. But maybe for the 30% who haven't, maybe you guys can walk through one, what are the advantages to DEXs, and then two, specifically for Brian and Maverick, how do you guys view what you're building as kind of the next iteration of DEXs? What sort of changes and modifications have you made to, stuff that's existed in the past that makes you guys different?
Yeah. So essentially, all the stock exchanges and all the other regulated bodies, right? The best and the worst part about them is that they're regulated and you got to do KYCs. And that again becomes one of the problematic aspect of centralized exchanges today, which is that if I have my funds on a centralized exchange, I'm essentially not sure if it's going to be always there after seeing all the events unfolding. And these events include events like 3AC and Celsius and a couple of other events which has been happening as far as today. And for larger funds, these are especially very, very important aspects because the principal amount which you have in your fund is something which is extremely important. And you can never let go of that. So that is something that we essentially guarantee you in a decentralized exchange. Whatever you have in your wallets and whatever you have, probably a derivative of your wallets in a smart contract always belongs to you. So I think from that aspect, having funds on a decentralized exchange and trading on a decentralized exchange actually makes a lot more sense. But the biggest problem when people actually, when they built Uniswap, SushiSwap, and all the other thing might have faced was that if they were to build a traditional stock exchange or a centralized exchange-like interface, which essentially comes with an order book, it would be very hard for you to actually go about storing these order books and all the other things on-chain because it actually becomes extremely complicated and expensive. So after the layer 2 came inside the picture and after the entire journey of zero-knowledge proofs, it has kind of become very much easier to go about running an order book exchange and building on top of these zero-knowledge proofs. And that's essentially what helps us provide the best liquidity and provide the easiness of access. So let's say if you're someone from Binance, or let's say if you're someone from Coinbase, or any other exchange that's out there, we have a single-click migration button, which essentially allows you to simply transfer your entire portfolio from whatever exchange that you use onto Brine in a single click. And that's all you need to do in order to migrate your millions or tens of hundreds of millions of dollars onto Brine. And apart from that, it's also about convenience. In the past, many people love trading from their mobile phones. And I, for one, I really love having the click of centralized exchange. So I also am a founder of a centralized exchange, which hosts over 1 million users and is also regarded one of the largest in India. So the best part about centralized exchanges is that the convenience, like you can immediately go get everything on your app. And that's something which is also coming on to decentralized exchanges today. So far stretched in the future, I'm seeing decentralized exchanges to be there and centralized exchanges to work along with decentralized exchanges and making the entire like exchange experience better. So that would essentially be my takes.
Yeah, I think great points based on transparency and sort of you own your own fund when you are trading on DeFi. But what I'm the most passionate about is actually composability or this DeFi money Lego, where for Maverick we're basically building our own proprietary automated market maker, and DAXs can build on top of us our AMM. And derivative DAXs, for example, perps or options can build on top of us too, so as other liquidity protocols or trading aggregators, et cetera, et cetera. So with that, we think it is really open for all the builders to come in and build this huge DeFi money Lego. And with meaningful competition out there, it can be really efficient, even compared to centralized markets or centralized exchanges. Think of it, we four can basically build on top of each other next day, right? And how fascinating would that be, and how efficient would that be? So I think that's super fascinating to me. So in terms of iteration, we've went through several iterations, and if you look back, we like to think DeFi has been through several phases. Yeah, and this is super niche, and probably most of us haven't looked into it. But I think the phase one is basically the DeFi summer. The AMM used a technology called XY equals K, where it's very easy. It's very straightforward mathematical AMM, but it's not capital efficient, meaning out of certain capital you put in to stake, you're not getting as much yield. So how do other DeFi protocols compensate this problem? So they basically emit their protocol token every day to make up to that APY. So the APY or the yield looks so much better, like 40%, 100%, even 1,000%. The only problem is that this is not sustainable. It's basically a down spiral, because once people who have your token start to sell your token, you need to emit more token because the token price goes down, and it's basically a death spiral. So a lot of the projects basically vanish after several months because of this model. So I think stage two would be something called concentrated liquidity. So like Uniswap v3, they basically be like, oh, what if you concentrate liquidity instead of spread it out? Now the capital efficiency is super high, and I think that's true only if you are moving your liquidity around in a timely manner, which is super challenging. And even if you manage to do so, the impermanent loss is super a significant as well. So you end up losing money when the market takes a pump or dump turn. So for Maverick, we started thinking we have a concentrated liquidity model where we follow the liquidity around with the price, so it's very capital efficient. But we also have tools for LPs to manage their risk or to mitigate their impermanent loss, and we think that's sort of closer to being a more elegant AMM out there and having more sort of TVL or money coming in to stake in DeFi. Yeah.
Thank you. So the next question is sort of for everyone on the panel, and basically the question is like, what's needed for more people to use DeFi? Like for all these DeFi protocols, what needs to happen? What kind of UI UX problems need to be solved, et cetera, for more people to use them?
Yeah, I mean, I think the cool thing is there's a lot of people that are working on that problem, which is, I think Don actually mentioned it earlier, which is like QuantStamp is also working on onboarding the next billion users into crypto. And I think the biggest barrier, or in my opinion, the two biggest barriers are lack of retail-friendly use cases that would actually bring users into crypto outside of DeFi. And then the second barrier is like paid acquisition. So on the paid, someone I was talking to earlier today, they asked me, they were like, "What's the CAC for Sega?" And I was like, "We can't calculate CAC because you literally can't run ads. Like it's like Facebook and Google and Twitter ban DeFi from running any sort of paid acquisition campaigns. And so I think while these things still exist, there's lots of barriers to growing users. So I think in the interim, the growth for users into the ecosystem will largely come from probably like non-DeFi use cases. I think there was a stat that said the majority, like 90% of users that created a wallet to play with NFTs, not for DeFi. And that makes sense. Like NFTs are accessible. NFTs are sort of like concepts that anyone can grasp. And so I think for now, a lot of the adoption will come from users who join DeFi and onboard through non-DeFi use cases, such as Flexa and payments and maybe social media for Web3 and things like that, who eventually then now have wallets, are part of the ecosystem, and can take a look at some of these DeFi protocols that exist.
Yeah, it's interesting. We actually look at this problem differently. I don't think that DeFi is a user play. I think it's a volume play, right? So while I definitely think that retail adoption is incredibly important, right? I think that the path there is actually more mature, I think, than it's often framed, right? Like we've seen Robinhood drive retail adoption, right? We've seen the gamification and entertainment components of, efforts like Wall Street Bets, right, or similar communities really kind of engage retail. I think what is missing and what's keeping a lot of the institutional volume out of DeFi is more reliable infrastructure that's really more focused on the execution and the compliance parts of the problem that larger organizations need if they're really going to push capital through, right? So, while it's exciting that we see a growing portion of folks interacting with DeFi, right? Anytime I kind of see those usage stats, I always think about it from a volume perspective, right? Like, okay, maybe you've tried a DeFi protocol, but how much money have you really put into it? How much do you really rely on it, right? How much volume are you moving on a regular basis? That next part of the problem, I think, is going to be really interesting over the next few years as DeFi and TradFi integrate. And we kind of see that next chapter of infrastructure evolve.
I mean, I would also see the same. I think in order for DeFi to, go from where it is today to billions of users in the future, I think it's very important for traditional companies to go about starting using crypto and probably using blockchain in their day-to-day service. So what if Uber tomorrow starts offering services using Bitcoin or Ethereum or USDC stables or whatsoever it is? Then in that case, there'll be a lot more people using these services. And expats like me and many others especially, I don't really want to pay. I don't have a card yet in order to pay with SGD or something like that. So I think when that kind of convenience comes, I mean, the entire world is entirely about a play of convenience. You just go and pick whichever option is convenient for you. If you find a buffet, a super fine dining buffet 2 kilometers from here, and you see another normal buffet 1 minute from here, I would rather go for the buffet which is 1 minute there, which is not even fine dining. So I think in order for getting in the billion users into the Web3 ecosystem, it's all about a play of convenience and making sure people are able to access it much more easily. And the best parties in the game which can actually drive this volume as of today are the centralized exchanges. In case of centralized exchanges, come with their own decentralized counterparties, decentralized exchange of venues, then we can easily migrate these centralized exchange users to decentralized exchange users. Of course, many centralized exchange might think what is there for me to actually go about pursuing this. But the biggest thing is that if you consider the example of India, which once used to do $1 billion in volume a day, is now doing $10 million a day. And this is essentially because of one small governmental change that the Indian government did. And within overnight, the entire volume of India dropped by nearly $990 million. So I think it's high time for people to, move from a more centralized to a decentralized angle, not only for the mode of convenience, but also to make sure that we are all together and we go about revolutionizing this entire space. Because, alone we are none, together we are aligned. So, pretty much on that. Yeah.
Yeah, I think the hurdle is still the wallet. So if you think about it, 4 or 5 years ago, the way you on ramp from fiat to crypto and crypto to MetaMask is exactly the same as today. So the user experience is very broken, and in a world where you can deliver anything with the press of a button to anywhere, I think that kind of user experience is just not there yet. So I do think the wallet is, there's a lot of opportunity over there. And in terms of institution money coming in, I think AML, KYC is preventing the next trillion into DeFi. So if we can have more clear regulations over there, I think that will be great for the DeFi market as well.
So Sharon, you've worked at you've worked on centralized exchanges before. Edgar, you've worked at Goldman. I guess how do you guys envision DeFi and the traditional kind of centralized financial system interacting? Do you see them merging at some point? Do you see centralized financial institutions using DeFi? How do you guys think that plays out?
Yeah, I think they're already merging, and I think we've seen the merge going on for a couple of years now. I mean, you have to ask when you think about integration, right? What are the metrics that matter? And again, I come back to volume. I come back to liquidity, right? As soon as you see institutions starting to move some of their liquidity into decentralized finance, you're talking integration, right? Now, from there, it's really a question of, okay, how well integrated is this organization into these two ecosystems, right? And I think that really comes down to an infrastructure problem. And from that perspective, I think we're in a very early stage there, right? From a technological perspective, I think the infrastructure to integrate seamlessly is just now being developed. But it's something that we've seen really over the last 6 to 12 months emerge as a demand from large organizations that have started to recognize the opportunity in these markets. They've decided to move into these new dimensions of the financial system, and they're now investing resources into building out the technologies they need.
And I also strongly support that there'll always be a band between centralized and decentralized financial institutions all the different time in the world. And I also see a lot of centralized exchanges moving on to the decentralized angle of sides. So I strongly believe that this is surely going to happen in the future, that many of the centralized exchanges might be so-called the decentralized exchanges of the future. So yeah, pretty much on it.
Yeah.
Perfect.
The arc is not so different than it was for cloud infrastructure or for AI, right? In my opinion, you kind of go through this. The first chapter is an explicit note of the new technology, right? Hey, we're building on cloud, or hey, we've got AI. Hey, we're implementing machine learning, right? And then the next step is tackling the higher level problems, the business problems that organizations actually care about, right? Hey, we can provide a better mobile experience for users, right? We can connect a network, if we're talking about Uber, right? We can connect a network of drivers and riders and create these more dynamic marketplaces, right? There's a lot of AI behind the scenes. There's a lot of cloud infrastructure behind the scenes, but it's not discussed as explicitly because there's an implicit understanding of how it fits into the stack of a given business, right? And I think blockchain will follow a similar path.
Yeah, I think a lot of that backend infrastructure, it's super hot and interesting, and then once everyone uses it, it becomes boring and no one talks about it anymore.
Yeah.
So I guess the next kind of question I have is, at Pantera we obviously invest across the stack, all the way from the infrastructure layer to the application layer. Each of you are building on you've chosen a different type of infrastructure to build on, whether it's a layer 1 blockchain or layer 2. I guess maybe if each of you could kind of walk through, how did you decide what infrastructure stack to build on? How did you make that decision? What are each of your thoughts there?
As for the stack, whichever you want to build on top of, it should essentially be a business logic that has to be applied in there. Probably, let's say if you want to do something on yield and all the other thing, Ethereum or something like that might probably do well because we are probably thinking of long-term yield, so as to say. So there is not a lot of put in, put out. But in the case of trading and all the other things, you might rather want to choose some other and it also depends on what kind of volume that you're trading with. If you're trading with millions of dollars, $35 gas fee is a penny for you. But if you are a high-frequency trader, then you have to go with something else. And as far as our case is concerned, we're a completely cross-chain solution. And the reason behind going into this thing is because we didn't want to become the Uniswap of Ethereum or probably the sushi swap of so-and-so. And or we didn't want to be a chain-specific exchange. We wanted to be an exchange which will be the only known regarded exchange for any enterprise to go about making their first venture in the decentralized trading ecosystem. So for our side, we weren't very chain agnostic or to say, but rather we were very agnostic about our user set and how we can go about fine-tuning this experience for them and how we can go about onboarding them to our platform. So yeah, anybody else?
We can go.
Yeah. You want to reverse order this?
So we really followed liquidity and volume, right? Today, MarginFi is built on Solana, right? It's a powerful, fast, cheap L1. We are very excited about what we call the performant class of blockchains, right? Aptos, Sui, some of these newer technologies that are really pushing performance benchmarks. Why are we excited about that? Because that type of infrastructure is best positioned to power financial markets, right? Financial markets are fast and they are extremely high transaction volume. So operational infrastructure needs to be cheap, right? It needs to be quick. But it's an interesting question. A lot of our business has really started to go off-chain, right? Today we view MarginFi on-chain software as really the middle of our stack, and we spend a lot of time on validator infrastructure underneath, MEV operations, trading execution systems. We build managed products for more passive experiences. This really comes down to Jeff from Amazon, right? Spoke about Amazon's influence and integration in blockchain. We build on cloud infrastructure, right, as part of our business, and we see a strong integration between the different types of infrastructure as we build business solutions, and I think that's going to continue.
I think it really depends on what each project needs. I think for Maverick or other EMM, you basically need a lot of on-chain activities and liquidity. So that's sort of the reason why we want to launch on Ethereum first, the mainnet, and then from there, sort of lower hanging fruit to other EVM compatible chains. So sort of, I saw this trend throughout the phase we're building Maverick, where you have Polygon that was very hot, and then you have Avalanche, and you have other chains, and different developers want to build on the hottest chains. But I still think it's more of a like chasing the buzz, but not the actual liquidity, which is very important for the business. And from that point, I actually am really interested in this new layer 3 idea where, as different dApps or different protocols building out your customer user base, you know exactly what you want from a chain, and to basically build a chain on top of that niche market. I think that would be super interesting compared to, think of a infrastructure first and start to build that first and getting users after you built out the infrastructure. But yeah, pass it to Winston.
So for some quick context, Sega is currently live on the Solana mainnet. And the reason that we picked Solana as the launch blockchain was, in addition to a lot of the comments that Edgar made around speed and transaction fees, but also composability. So I think we've talked about this a little bit today, but one of the really fascinating aspects of DeFi is the composability nature of these different protocols. And back in November when we began working on Sega, the concentration of a lot of really talented, smart derivative protocols were very concentrated on Solana. So it was our aspiration that we could compose and leverage existing tooling that had already been built on the blockchain. Obviously, in addition to that, it's a really fast and low-cost blockchain. So what that means for the user experience is that it's great. Like a user could try out your protocol without having to pay $100 just for the transaction fee, which I'm sure anyone who's made a transaction on Ethereum, last November is very familiar with. And also, what's really great with Solana too is because the transaction fees are low, users can actually try out some of these protocols for the first time, so they can actually learn and start picking up some of these financial building blocks that they otherwise wouldn't be able to on some of the more expensive chains. With that being said, I think depending on the protocol that you're building, you may be looking at one blockchain, or you actually could be looking at lots of different blockchains if it's an idea or a solution that applies to different chains. So for us, we launched on Solana, but next we're likely looking at building on Ethereum because that's where more users are, that's where more TVL is. And so I think the decision of what blockchain to be building on is very protocol dependent. And it doesn't necessarily have to be a decision that you make once in a sort of finite way.
Yeah, that last part makes a lot of sense. So I guess the last kind of question I have to wrap up is, how do each of you think about, how did you think about deciding, what investors to work with for your guys' early stage rounds? How do you think about selecting early stage investors to partner with?
All right, I'll kick it off. So look, I think investors are instrumental, extremely instrumental to early stage startups, right? When you're setting the very foundation of your organization, right? The folks that you have around you and the resources that they bring can make or break your direction out of the gate. It's a huge indicator for momentum, velocity, picking up additional resources as you grow, your early customers, right? We view investors as team members on one side of the organization, right? When we were getting started, it was all about what problem are we solving, what kind of resources do we need, and who can we align with to bring us those resources, right? Pantera has a legendary history in this industry, phenomenal institutional network, right? And a phenomenal set of organizational resources, right? This is something, we were chatting last night at the dinner about the various work streams that Pantera spun up over the years to help early stage founders build out kind of those key pieces of their organization, right? That need to be there as they're going after the business problem that they're excited about. There's other types of investors for sure. In this industry, folks that just have deep expertise. Sometimes it's technical. Sometimes it's dependent on ecosystem, L1, what have you. And kind of a couple different ways that you can look at it, but I think it really does come down to setting a good start and setting a startup up for velocity.
And of course, investors, when you go about fundraising and all the other stuffs, there's a comparative saying investors are like the new cars you're going to purchase for making your travel life easier. You have to be very, very particular about what car you're going to go about choosing, because each car has its own specificities. Like this car, a Rolls-Royce might be completely luxurious, but it's not going to give you mileage. Or a race car can take you to your end goal really, really fast, but it's again going to have the same, you cannot ride it on bumpy roads and all the other stuffs. So I would have to say investor comes with specific qualities. And I have seen a lot of founders going about cold mailing their pitch deck to almost all the investors in the galaxy. But it doesn't work out like that. You have to be very sure about this investor being in my table can take me to this part. And this investor having this portfolio company inside their portco will be extremely helpful for me. So I think these aided decisions matter a lot than going about cold mailing. And another thing which had also worked for me in the past has been personalizing your invitation to these investors. So when you go about pursuing an investor, and if you really want him, do everything in the plate to go about pursuing them. Like probably send them a cake with your pitch deck on top of it and send it to them, or get to know about where your investor goes. I mean, of course, don't spam them and all the other stuffs. Give them their private life, but we can actually just go and like give them a personalized card, or probably something. I mean, like just I've done all these stuffs in the past. Not to be creepy, but yeah. So. Yeah, these kind of work, and these kind of personalization kind of actually works. And when an investor says no, it's surely a no. There is no point in going and like trying our extra luck in there. So it doesn't work like that. It has to be a fair partnership where the investor also likes us, and we also feel that the investor can actually add some extra value. So from my side, that would essentially be some points of going about pursuing an investor and being completely specific about what investor I need. And someone I had always been bullish on has been Pantera, and I've been pursuing them for quite some time. And you guys have been phenomenal. The team has put me, I mean, half of my connections, some of the greatest connections in the Web3 ecosystem comes from them. So a big kudos to you guys. And apart from that, there is also like various other funds. Some funds are really good at providing you liquidity, market making, and all the other kind of different activities. So depending upon, again, your business logic, I think these funds can also be extremely, extremely helpful. There are some funds in my table without whom I would have never reached up to whichever point we are at. So I think finding the partner in the venture partner is just like finding your life partner in your actual life. So please be very sure to find the right one. Yeah, over to you guys.
Go for it.
Yeah, I mean, just to keep things simple, I think we wanted to pick the best go-to-market partner for our company. And Pantera has been an incredible investor in that regard, not just in terms of making introductions to market makers who will market make our products, or growing users and user adoption on that side, but just being able to help us amplify our reach. Even just getting the opportunity to be here and connect with all the folks in the room and share a perspective on DeFi, I think is something that I think is quite unique to Pantera as an investor. And yeah, I mean, like with that being said, I actually wanted to take this quick opportunity to announce that we're actually launching a brand new product really soon. And so for anyone here who is currently investing in TradFi fixed coupon notes or auto callables, who is curious about that in DeFi, I'd highly encourage that you check out our Twitter because we'll be announcing this new product soon. And it's quite exciting for investors. But yeah, just even getting chances like this, I think, is a really huge advantage. And we're very lucky to have Pantera as an investor.
Super exciting to launch a new product. Congratulations to you.
Thank you.
Yeah. I think for founders, it's really hard for you to not get carried away by all those headlines. XYZ closed XYZ amount led by XYZ, right? It's just like you're sort of wanting to chase that kind of flashy numbers or flashy investors, but I think really importantly, the investors should really care about you and position you in a sort of like a core piece with their investment theory. And also, I think they should be staying on top of the trend in your vertical or Web3. So when you need advice or guidance, they're there to ready to provide guidances. I think that will be sort of the most value-add VCs in my perspective.
Well, that's everything. Thanks for taking the time to join the panel, guys.
Yeah.
So much.
Yeah, thanks.